Hello, I'm Lelda Smits for the Finance News Network, and joining me from integrated pet care company Greencross is its CEO, Jeffrey David. Jeff, welcome back to FNN.
You're welcome, Lelda. It's nice to be here.
Greencross has just reported record first half results. What were the highlights?
We have, Lelda. It was a great first half. On an underlying basis, our revenue was up 43%, our EBITDA up 62%, and our net profit after tax up 81%.
Terrific. Now, consumer conditions have been patchy. How did like-for-like sales trend over the period, and how do you expect trading conditions will impact the second half?
So we're very fortunate that the pet industry is quite resilient, and we've seen that in the past when we've had tough consumer times. At the moment, we're trading strongly. For the first half, our like-for-like sales in our retail business in Australia was 6.5%. We were 6.1% in our New Zealand business and 6.2% in our vet business. And since Christmas, like-for-like trading has strengthened.
Okay, now on to mergers and acquisitions. What progress has Greencross made in terms of realising synergies from the Greencross Mammoth merger?
So we're going very well. Everything's on track. All of the cost synergy goals that we set ourselves have been met and are being delivered, and the revenue synergies are progressing very, very well. Now,
Greencross also bought the City Farmers business in July last year. How has the integration progressed?
So the integration's going very, very well. We purchased 42 stores from City Farmers, which gave us a market-leading position in Western Australia. All of our goals for cost synergies and trading term margin synergies have been achieved, and we're going very well with the re-merchandising and the reformatting of all of those stores.
The company is now diversified across veterinary care, retail and even pathology. Are there any complementary businesses you're considering?
So we're working now to bring the services and the retail businesses that we have together, to co-locate the facilities that we have so that we can make it easier for our pet consumers to own a pet. Putting grooming with a pet store, vet clinics with a pet store in a co-located facility, and we're seeing some great success from that.
Onto your outlook, the company's guidance has flagged 25 new Greencross stores by the end of FY15. How is the rollout of new stores progressing?
We've had a great year to date. In addition to the 42 City Farmers stores, we've opened 21 stores, and we have lease commitments for a further 9, of which 4 will open in early 2016. So we're absolutely on track to deliver our guidance.
Right, and Jeff, what about vet acquisitions?
So we've done well on vet acquisitions this year. We've achieved 14 acquisitions so far, with annualised revenue of 27 million, beating our target of 25 million, and the pipeline remains strong.
Greencross is targeting earnings per share of 36 cents over the full year. How are you tracking toward that goal?
Well, we've had a very strong first half, delivering 48% of that target, and so we're confident of delivering the 36 cents.
Finally, Jeffrey, what are Greencross's key priorities over the coming 6 months?
Their key priorities are the same as they always are. Delivering on our growth targets by opening more stores, acquiring more vet practices, and deepening our engagement with our pet consumers.
Jeffrey David, thank you for the update from Greencross.
Thank you, Lelda.